Hello everybody, Steve Griffiths here, developer of the MT Predictor software program. If you could all let me know whether you can hear me okay and whether you can see the chart with the risk disclaimer there, okay, that'll be actually great. While you do that, I'd just like to read the risk disclaimer and just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept, and that's the most important point, accept that losses can and will and do unfold. No matter what trading approach, there always will be losing trades. Right. So welcome to today's webinar. I want to kick off today by having a look at DPs again. So I'm just going to clear this chart off. This is a 15-minute chart of the ES. Remember what we do here is exactly the same kind of approach, whether you're using the NinjaTrader add-ons or whether you're using our standalone version here, we do exactly the same approach. So I just want to go over this chart, just going back, just to show you or remind you again about which pivots to use, because you look at this chart and you can see there's an awful lot of pivots there, aren't there? There's lots of pivots. So of course, you know, you could easily be confused by knowing, well, which pivot do I place a DP on for getting support or resistance? Now, remember, these are on the chart in advance, okay? So they're on the chart in advance. So this is the thing, they're leading indicators. They're there before the market even gets there. So let's just go back through this chart. Let's go just back a little bit. Let's just say, let's just use trading mode. And let's go back to here somewhere. Remember, when a market is going down like this off a pivot, so there's a pivot high, can we see that? When the market's going down like this, the first place to look for support or resistance is off the pivot from the last swing into the high or low. You'll hear me say this again and again and again. So the last swing, can we see this here? Do you see that? That little swing there, that swing is the last swing into the high, isn't it? There's the high. This is the last swing into the high. So you right mouse click here, do decision point. That will have given you an area of support. Today I'm just going to be looking at our typical DP support. Not really going to be using our maximum quite today, just at our typical. So can you see how that's on the chart in advance? If I turn training mode off, see what happened. Basically, it came down here. It provided an area of support for the market then to rally back up again. If I scroll back a bit further, and you can see all this chopping here. Can you see this? All this market chopping, rallying back up here. So where would the place have been to place the DP for resistance as the market was chopping up there? Well, if we look at the chart, I'm not going to use training mode again. I'm just going to go over exactly the same thing. As the market in this case was rallying, do you see this? This is the last major low. Do you see that? But can you see how this swing here is the last swing into the low? Do you see that? That is the last swing into the low. So that's why we go off this pivot here. We right mouse click, we do decision point. Again, I'm not going to worry about the major one. This would be the area of resistance. If I drag it across, just look what the ES did. It rallied up here, chop, 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 chop. But look where it made the ultimate high before the market came down to make the ultimate low. You know, sometimes these DPs do work nicely like this. So that's all well and good when a market is reversing back. But what happens is if a market is making a new rally up into new highs, like it is at the moment. So let's just go back to here somewhere. Now the market is making a rally up there. So the first place to look is the last swing into that low. So there'd be that last little swing there. So it would be there, which is where the market made a small high. If it then goes past that, the next place to go back to is the last significant high or low. So if it goes beyond this, if I go forward, we can see that's what it's done. It's gone beyond that. Do you see that? It's now gone beyond that. We then go back to the last significant high or low, do the DP from there. And of course, the last significant high or low is here, isn't it? So this is where we right mouse click, we do decision point. This will be the next area of resistance. I'll just take that one off. So if I turn training mode off, look what the ES has done today. It's gone zip it up into that. It's now starting to decline down. If I scroll back a bit, can you see how this was the last significant low here? As the market made, in this case, it would have been a new swing down to new lows down here. So if you take the DP off this pivot, look where that low came in. Again, I won't be using the maximum. Came in right at our DP support. If I scroll back even further, as the market rallied up here, do we see that? Where's the last swing into this major low? Can you see how you can visually quite easily see major highs and lows? So the last swing, do you see that? The last swing into that low would have been off that pivot high to give an area of resistance. And as we saw a few weeks ago, that's what made the high there absolutely perfectly. So if I scroll out here, you can see that if you choose the correct pivots to use, basically we caught that major high. After all this chop down here, we caught that low. After all this chop up here, we caught that high, we caught that low, we caught that high. Now, of course, it doesn't always work this well. If it did, you know, we'd all be billionaires overnight. But this is what we try to do with MT Predictor, is that when it is doing what we anticipate, then we work with it. So I just wanted to go over that just as a good example, just to remind you of the two places that we really look for the pivots. In other words, we're not using all these pivots here. So in other words, we wouldn't place a DP off every single pivot because there'd be so many support and resistance areas. It'd be all, you know, it would be meaningless, wouldn't it? So that's why we don't get the computer to do it, because quite often people ask me, well, why don't you just get the computer to do it? Computers are intelligent, aren't they? They can do lots of things. They can do everything. Actually, they can't. They can't, because it's very difficult to get an algorithm to do something simple as, first and foremost, look to the last swing into the high or low. Then if it's retracing off a pivot high or low. If it's now making new highs beyond the last major swing pivot, high like this one, going down into this one here, then we use the last major pivot high or low. So they're the two things to do. Does that make sense to everybody? And are you happy, and do you understand which pivots we're basically looking for? Because it's very important. And that's why I wanted just to go over this. I just thought it was good to do. RJ, I do archive the videos. They're all recorded. I keep the most important ones, and if you go to the customer section or the member section of the MT Predictor website, if you look in there, there is about 20 or 30 recorded over the last 2 or 3 years, and there's at least 2 or 3 there that specifically talk about which pivots to use for DP placement. So again, I know this is important. This is why I've gone over it again. So I'll probably keep this video as well. But it's nice to review it every once in a while, isn't it? So do you all see now why we don't get the software to do it? Why we simply look for the last swing into the high or low to get an area where the market is reversing off, or if the market is going up to new highs and lows, then we use the last major pivot high or low, depending which way it's going. Now, of course, if you go to the NQ, I mean, you know, they don't always all work this way, this beautifully. If I scroll out here, look at this. Well, I say don't work all that beautifully because actually that would be the last pivot high. And you can see we've gone beyond the typical there. But of course, if it goes beyond that, we then go back to the last major pivot high previously, which would have been here, right mouse click, do a decision point, and actually that's caught the high as well. That's quite nice, wasn't it? So that's caught today's high as well. So now, of course, if we go down to our 3-minute chart, we now define this as being a clear pattern. The pivots making a nice high, therefore we gauge the large degree trend is down. Same with ES, you can see here. So of course, as the ES is now declined, I'll just take that one off. Whoops, don't quite know what that, why I did that. Just clear it all off. Put that one back on again. Sorry about that. Wrong mouse click there. Now go down to the 3-minute. There it's coming as the high. So if there was going to be minor support, the minor support would be off the last swing into that high there. So we're sort of in the area now where there could be some minor support. So this would be a lovely place where we could get a little corrective rally. So the large degree trend is now turned down because we've come off this 15-minute high. Our MTP trend has gone blue, gray. It'll probably turn red fairly soon. We're at a little minor DP support. So can you see how now would be the perfect place for us to get a little corrective rally? And then if we get a TS3 or W3 or wave 3 trade sell set up a bit later in the day, perhaps around here somewhere, then that would be a perfect place for another potential short. So again, you see how we're working in advance of the market the whole time. We're not just using our scanner. We're not just saying, well, okay, there's our scanner and we're just going to wait till it beeps and then try to react. Trying to react to markets is foolhardy because you can't do it. What you need to do is you try to work in advance. That's why we use the DPs. That's why we try to anticipate what may happen. We're not saying it's going to, because the market can go random half the time, but you all start to see how you can start to build a potential setup coming later today. There's your major resistance. There's your decline down. On the shorter time frame, that's your last swing into the high again. So this would be an area for, minor support, i.e. to stop that little decline down there. We're then looking for a potential ABC corrective rally back up here. But you start to piece together what you're anticipating or what you're starting to look for. So hopefully this has been a good example. Now, Ravar asked me about when I say sometimes about whether a market is, whether a swing is basically too short or too long. What I'm basically saying on that is if you now get an ABC correction here, ideally what we'd like it to do is be fairly proportional in time to this decline down here. So if I place our WPT and our WPT up for a wave 2 or B, and I go off there to there, that gives you the price area. But what I'm looking for is I'm looking for any correction up here to look fairly symmetrical to this swing here in time. In other words, I don't want to, if the ABC came in right the way over here, do you see how this then correction would have taken so much longer in time than this decline here? So ideally, any correction here should be somewhere between half the time. That's where our WPT there starts. And obviously that's really, really short, and perhaps about 1.6, 2.6 times that distance in time. But that's quite difficult to see coding wise. But you're just looking for something that doesn't look totally out of proportion, if that makes sense. We're looking for swings that look nice and symmetrical is what we're trying to do. We're looking for nice, good looking patterns. Sometimes that's quite difficult to teach. It's the kind of thing you see over time. But that's what I mean by if a potential setup is taking too long. In other words, a potential swing out here would be far, far longer in time than this decline here, if that makes sense. Looking for basic symmetry. So again, this is what the whole MT predictor is about. It's about we're only looking to try and trade when we get the patterns coming together. I mean, the YM was quite a great example over the last couple of days. So yesterday was a really choppy, horrible day. Look at this, look, chop, 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 chop. Remember, we're not trying to trade every setup. We don't do that because we understand that markets are basically random half the time. What we're trying to do is when the picture becomes clear. So for that, we go to a higher time frame chart. That's a time frame between 3 and 5 time frames higher. I'll just take everything off there. So yesterday, we're looking for the market to basically come off prior pivot highs and lows. So let's take the DP off there. It didn't quite come off. It sort of came off that pivot, but it wasn't perfect. Do you see how you basically had a high there? In fact, I'll look at that in a minute. And then you had another high here. So if anything, the best trade of yesterday was probably that TS1 wave 3 trade setup. But that would have been an awful, awful long wait as the market chopped sideways there. So really, really horrible day. Ideally, what we're looking for is if I go back to 15-minute chart and I go back to before the previous day was even opened, do you see how we had a pivot low there? Right mouse click, do decision point. That was on our chart in advance. You see that? So if I take training mode off now, look what it did yesterday. Not yesterday, the day before, I mean. Friday, wasn't it? Came in and came right into our support zones. If we go to our shorter time frame chart, this is the kind of thing we're looking for. Do you see how this VS buy setup on the shorter time frame chart came in right at higher time frame support? Do we see that? This is what we're looking for when the picture becomes clear. So this is why when right mouse click over the blue buy bar, do analysis. Remember, we use our correct position sizing. I'll just change that back to a 2% risk on a $20,000 account. That would have got you in long up into the first target there, where a profit of approximately 4 times the initial risk was available. So this is the kind of stuff we're looking to do. No matter whether you're trading short time frames on the USE minis like we've got here, or whether you're trying to trade on longer Forex charts, or you're trying to trade on daily stocks, exactly the same principle applies. We're only looking to trade when the picture becomes clear. The rest of the time we're deeming that the market is random, so we don't do anything at all, and we're looking to see when the market makes a reversal off our higher time frame support and resistance zones to make a trade if we get a setup on the lower time frame at that reversal. In other words, here you can see our MTP trend had gone grey to show you in the process of making a reversal, or as of yesterday, sorry, Friday, the market trend would have been up, therefore you'd have been avoiding these sell setups, and that was a great trade setup to take there. It would have been up into where? Well, if we go to the, we've already had a glimpse of this, haven't we? That's the pivot to take there, because that's the last swing into the low. Do you see that? We're doing exactly the same thing. So we don't use that pivot. We use that one, which is the last swing into the low. This would be the 15-minute resistance. It just came up to the high there. And if we go to the 3-minute chart, we did get a VS sell there. It was, slightly above that pivot, but it was still in and around the 15-minute DP to then get a short trade for another 3.3R as the market declined later in the day there. So it was lovely that we actually caught the low of the day and the high of the day. Well, bars of the high of the day and the low of the day, not the exact price point, but you know what I mean anyway. So, that worked really, really beautifully. But if we look at the, say, the NQ for yesterday, the previous day, it was sort of choppy and horrible. So does that make sense to everybody that we are just looking for the pattern when the picture becomes clear? Ben said about the MTP trend. You see this color coding we've got down here. Well, it's blue for up, red for down, black for in the process of making reversal. So ideally what we're looking to do is to see whether that agrees with our DP analysis. And perhaps this is a good example to look at, Ben, is because here's our 15-minute resistance. You can see the market should be going down now, but our MTP trend has gone blue. So the two things are telling you something opposite. So, our blue MTP trend would suggest it's going up. Our higher time frame resistance would suggest it's going down. Therefore, they're in conflict. Therefore, the picture's not clear. Therefore, you'd stand aside. So that's why you probably wouldn't want to take this TS1 buy setup, or indeed, if you get a sell setup here, you probably wouldn't want to take that either, because the two things are in opposition. Ideally, what you'd like to have is a position like this, where you have the higher time frame resistance, the market trend is going down. If this now turns red, that will be telling you the same thing. In other words, the MTP trend just helps confirm your DP analysis is that way around. You don't just use the MTP trend. Now, I've been trying, going back, people will ask, well, why on earth did you include this trend indicator? Well, over the years, I've been trying desperately to try and find a color-coded indicator that makes it easy for you guys to basically say, okay, I want to take a setup, but I just want it in the direction of the large degree trend. And remember, we used to have the STF. We now have the MTP trend, which is better than the STF, but neither of them do as good a job as the DPs. And it is so difficult to actually get a indicator which will work 100% of the time, is because markets are random half the time. Okay, this is why it's so difficult. This is why so many mechanical systems fail and automatic trading systems fail, because markets are random half the time. So that's why it's so important just to wait till the picture becomes clear. And it's so much easier doing that when you've got your higher time frame support and resistance zones on the chart, because you can see when the market is making reversals at these levels. It's just so much better doing that than it is just relying on an indicator. We can use the indicator for confirmation, but not as our primary guidance, if that makes sense. So interesting enough, you can see in real time here, that's where the ES, that initial decline, you see it stopped right at that DP, is now starting to make a little rally up. So I wonder if this is going to be a corrective rally. So perhaps another good example here unfolding, in real time as we're talking. But it's hopefully a good example, again, to show what we're looking for to try and only trade when the picture's clear by using our DPs on our higher time frame charts, and to then work in advance of the market. There was a great example we did, was it a couple of months ago, where we had a situation like this and it worked out absolutely perfectly. Now I wish it worked out like that every time. Of course, markets are not like that. Reality is not like that. The market will not do what we anticipate all the time. I mean, there's a good example we had on the YM here from yesterday, wasn't it? Where there was the higher time frame resistance, and basically the market chopped sideways. This is what can happen as well, and this is why sometimes trading is very frustrating. This is why trading is actually hard, not because of the techniques we're doing, but because the market sometimes goes random in the middle of our analysis. And this is the frustrating thing. It's the thing people don't talk about very much, because it's not sexy, it's complicated, it makes things a bit confusing. And this is just something you're going to have to deal with. So let's have a look at the ES. The ES now is still in around there, but the YM is now starting to go down to new lows. Or perhaps it's just going to wait there. I'll have to wait and see. So does that all make sense to everyone on what we're trying to do? And are there any questions on that before we perhaps move on and have a look at a few Forex examples? Any questions on that? TJ, you should be able to answer that question yourself. TJ said, is chop predictable? Well, as I said before, markets go random, so therefore nothing's predictable. In other words, we can never predict whether the market is going to go into chop or whether it's going to go into a nice perfect pattern. That's, you just can't do that. If it was predictable, we'd all be billionaires, but we're not. This is again the hard psychological thing of trading, is that even if you get into a nice trade like this one, it can then go choppy and frustrating for a very long period of time. And that's just life on that. Shavir, I'm sorry I can't look at any Indian markets, because I don't have any data feed for any Indian markets at the moment. So I can't look at any Indian markets. So let's go over and have a look at some Forex charts now, unless there are any other questions on yeah, Randolph, you're dead right. This is why he says about the DPs and how it's important going over again and again and again about which pivots to choose. Randolph, that's what these training sessions are for. That's why they're free. We don't charge you guys to come in, and that's why I'll record them so you guys can review it again and again and again and again and again and again. But so the principle is not difficult. The principle is basically the last swing into the last high or low, or the last major pivot high or low as a market is moving in that same direction. They're the only two things you really have to focus on for your pivots. But just keep reviewing the videos. Let's have a quick look at some crude oil. I've been asked about crude oil, so right, here's crude oil. Oh, this is an hourly chart. Quite interesting here. Looks like there was a sell set up there on this hourly chart, a VS sell. So I wonder if that came in at higher time frame support. So let's go out to a 4 hourly chart. Where's the last pivot high? Well, the last pivot high is here. Right mouse click, decision point. Can you see how that was at the 4 hourly resistance? So now if you go down to the shorter time frame, the hourly, do you see how this particular sell setup was at higher time frame resistance? So actually, Shavir, this is probably a good example. Why is there a history triangle there if it's a good trade setup? But if I right mouse click, do analysis, you can see they were the swings at the time. Sometimes if you have a market that has very short swings, in this case it was only 2 swings up to the high, the pivots can recalculate as it moves forward. But if it does that, we never just forget about the setups, because that would be just sweeping under the carpet and hiding it, and that's not right, is it? You should never ever do that. That's why if the pivots recalculate, we always show a history triangle if it would have been filled on the next bar. So most of the time, these history triangles are actually losing trades, but there are times, like in this example, the history triangles are actually profitable trades, or a trade that's going in the right direction. So that's why we always allow you to place the analysis on them, to then do the analysis to see what the setup would have been at the time. So because I can take that all off, and if I actually use training mode and I jump back to that particular bar, you can see that's what it would have looked like at the time, you see. If that makes sense. So there you go, Shavir. It looks like a good, looks like a reversal coming off that 240-minute resistance zone there, perhaps to have a little bit of a decline coming in. So a good example there, again, to show a trade setup, but a trade setup using different time frame combinations. In this case, an hourly short trade using a 4 hourly DP for the resistance. And that's the kind of thing we can do on Forex. We can have a look at some of the markets on Forex. So let's see if what these markets have been doing. Let's go out onto the daily chart. So the euro has just been going up and up and up. Swiss franc's just been going down and down and down. British pound is still rallying as well. Looks like the dollar is weak, doesn't it? Japanese yen. Not much happening on that as it comes down. Australian dollar, US dollar. The one we were looking at a few weeks ago was this one here, wasn't it? Where we had a short trade coming in on the 4 hourly chart, wasn't it? Off that TS3 sell. Now this can happen sometimes as well, is that here you'd have been out with a very nice 7.8 hour profit, and the market has actually kept on going in your direction. Now that can happen as well. It just means you just move aside and then forget about it. Go on to the next market, next time frame. I see the ES is carrying on down here as well. So this can happen as well. So probably a good example, again, of how to work in real time is, do you remember we were setting everything up here for a nice support zone coming in here, the market potentially doing an ABC correction up into that area there before getting a nice short sell. Well, the market's had other ideas. The market has said, no, I'm not going to do that. It's now carrying on down to new lows. So what does this mean? Well, it just means we hit clear all, and we now don't assume anything's going to happen until a pivot low comes in. We now just start again. So it doesn't mean to say we're wrong. It just means the setup or potential setup that we were anticipating is now no longer an option. We now have to wait to see what happens. Where would a potential support zone now be? Well, if we now go out to the 15-minute chart, we're now at the maximum DP zone, so there might well be a low come in here, but if it keeps on going down, the next pivot low to use would be off this pivot here. So this would be the next area of support. Just going to take that one off. So if we don't get any kind of support here, the next support zone is down there, which obviously is quite a long way off. So we'll have to wait and see. We'll have to wait and see whether a corrective rally comes in here or whether it goes straight down. But again, this is what happens. Another good example of sometimes the markets just don't do what we anticipate. And we just have to have the patience to wait until it does. It just looks like here, it's just going to keep on going down, doesn't it? You know, it's frustrating when we can nail the high of the day, potentially with our 15-minute DP and actually anticipate the decline perfectly, but not get in on a potential trade setup. That can be frustrating. So you're saying that, I think one of you guys said there was a VS sell on a 5-minute chart. Was that on this one here? Perhaps not on the 24-hour chart. Right, it's interesting position now because on the 24-hour chart, look where we are on the ES at the moment. This is the last swing to the high, isn't it? See that? There's the last swing to the high. So we right mouse click, we do DP. We're now right at the DP support. Let's take that one off. We're right at the DP support. So you never know. We might actually get the support coming in at this level. So now if we're looking at the 3-minute chart, this might be the initial decline down. We might now get our ABC correction. So I wonder on a shorter time frame, I wonder if we actually have a 5-wave pattern down. If I right mouse click Elliott wave intermediate, there we are. So that's probably why it carried on down a bit further, because 1, 2, 3, 4, 5, right at the typical wave 5 WPT at your high time frame support. So now I wonder if this will be the place where we get the support coming in. So this is why we don't forecast. This is why we always react into what the market's doing. In other words, the market went beyond our first support level. We then clear all. We then review it to say, okay, let's have another look to see if there's any other potential support. And that's exactly what we did. We went out to the 24-hour chart, put your DP support zone on, noticed it's making a reversal up there. Now we can then again anticipate, is there going to be a correction? TJ, it's exactly the same. He said, any advantage to day trading over longer term swings? Now you take exactly the same approach. Exactly the same approach, or whether you're doing short-term analysis as we're doing here, or whether you use daily charts with weekly as the longer time frame, or whether you, as we saw in the the crude, whether you use an hourly chart with a 4-hour for the higher time frame, it's exactly the same approach. Exactly the same. It means that some of you may like to trade on longer term charts, so you're not sitting in front of the screen the whole time. Others of you may like day trading because you don't have to have the margin requirement to hold positions overnight. So it's up to you. Right, so are there any questions now as we go into the last sort of 5-10 minutes of the webinar? I'll open it up to questions. RJ, there's a new version of our NinjaTrader 8 add-ons that have these extended DPs. So if you go to, let's have a look. Oops, here's NinjaTrader 8. So this is the 24-hour chart. So exactly the same kind of thing here. So it's just taking a minute to draw. There you go, they're in that one. But you have to turn them on by going to indicators. There's a video on this. If you go into indicators, then come down in indicators to the decision points, display DP zones. You can either display both or just the typical or the maximum. So you can decide which ones to display in NinjaTrader. But the version you want is our latest version that's in the member section of the website. So if you download that. Right, so any other questions? Gary, yes, we're still looking at this new data feed. We've coded it now and we're just testing it and just seeing how it performs. It seems to be working well on short-term charts, not quite so good on slightly longer time frames like 4-hourly and hourly charts, but seems to be pretty good or if you're a day trader on say 3-minute, 5-minute and 15-minute charts. It seems to be pretty good on those time frames. So we're just going to do a bit more testing. I'm away on holiday next week, so there'll be no webinar next week. I'm actually going to be catching some bodyboarding waves with my family next week, so I'm going to have some time off. I've been working quite hard with this lockdown over the last however many months, and I'm going to have a holiday basically. Feel very tired, so I'm going to take some time off. So there's no webinar next week, and if the testing goes well, then we'll have a look at trying to release the new data feed perhaps in early September. But I just want to try and have a look at these longer term charts. Yeah, don't worry, Ben. Lots of sunscreen. I don't think we've got quite the temperatures that you guys in America have over on the West Coast. I see you're breaking all records over there. We had it very, very hot here a couple of weeks ago, but it's now miserable and raining. But in a wetsuit on the beach isn't too bad either. Well, thank you very much, everyone. So it's important that everyone has a time to recharge their batteries and time away from the screens. So I hope you guys all do that as well. But when I'm back, I'll review everyone on how that's going. So the next webinar will be in September. What's that? September it'll be the 1st, will it? In about 2 weeks' time. So no webinar next week. So have a great trading week, 2 weeks, everyone. Have a good, hopefully the markets are kind to you and have some good setups. But remember, we try and only trade when the picture's clear. We wait till everything comes together for a good, clear, clean picture. And that's what I've tried to stress again with today's webinars. So hopefully that makes sense. And I'll put the recording up in the member section of the website for you guys to all review at your leisure as well. Right, have a good couple of weeks, everyone, and I'll see you all in 2 weeks' time.